Most traders focus on learning how to enter trades, but very few traders learn something even more important, that when not to trade. And in reality, the biggest secret to surviving and growing in trading is not just finding good trades, it is avoiding bad trades. In this video, we will understand which situation you should avoid trading in and when it is better to stay out of the market. Hello everyone, I am Mahesh and you are watching Live Trading Emperor Global. In the previous video, we learned how to take buy entries from demand zone, how to take sell entries from supply zone, confirmation candle for entries and stop loss placement. If you have not watched part 5th, I recommend watching that video first because today we will discuss something very important when you should avoid taking trades. Before we begin, if you want free access to the Emperor Candle Indicator, make sure you watch this video completely because somewhere in the middle or end of this video, I will explain how you can get free access to this indicator. Now let's begin. First rule, avoid trading between demand and supply zones. If the price is between a demand and a supply zone, it is better to avoid trading because in this situation, the market often moves sideways, becomes a range bound, and has no clear direction. Like over here, for example, you can see on live, the market started selling from here, from supply zone. This was the first confirmation, black candle, which is a black candle. So market started to fall from here, and now it is in the middle. And below there is a very strong demand zone. So now look, when you entered at such scenario, so market makes you or market trapped you in sideways zone or volatile zone, and most of the time it hits your stop loss. So avoid trading is such kind of zones. Second, large zones on higher time frame. For example, we'll go on large time frame like over here. For this, see, this zone was created by this inverted hammer blue candle, and now over here, see, it created it got created by just one candle of 2 hour time frame. But when market reaches is again to test it, then see, market spend more than half day or more than 1 2 3 4 5 6 7 8 9 10 or more than 10 means 20 hours in that zone. So trading is such avoid trading in such kind of big zones or large zones. Then the market move often inside the range of that zone. Even if you are trading on 1 minute, 3 minute, 5 minute chart, you should still be careful because the market is still reacting to the higher time frame zones. Rule number 3, avoid entries in the middle of large zone. That's what I said, like this. Avoid entries in the middle. If price comes near the top of the zone, look for selling opportunities. Like over here, market reacted for first time and closed below this candle. Sorry, the candle was closed below this line. So at such kind of, the zone is big. So here you can enter for selling opportunity, and your stop loss will be just one candle. If candle get close above again that high line, and target will be low line. And for same, if price come near to the bottom of the zone, look for buying opportunities. Always try to trade near the edge of the zone, not in the middle. Rule number 4, large candle zones on lower time frames. Means if I go to now 1 minute, sometimes even a smaller time frame like 1 minute, 3 minute, 5 minute, a very blue large candle or a red candle zone can appear. When that happens, price may often move sideways inside that zone. Like here we are not seeing. So right over here, I was talking about this. Like see, this 1 minute blue candle. This was so big. So at such time, you have to avoid trade if the market is in the or is in that zone. So market can be volatile. So at such time, you can sell at this high line and you can buy at this low line. But stop loss can be just of one candle, but your trade probability or trade profit can be this whole zone till the end. Bitcoin is most of the volatile in all instruments. Like over here also, as you can see, this 1 minute candle was too big on gold. So like over here, as I said, try to sell on high line and buy on low line. Like as this, because these two candles are very big. Rule number 5, never trade without confirmation. Like this. So always wait for confirmation. Buy confirmation can be green candle like this, or hollow candle, or hammer candle. And sell confirmation can be black candle or red candle in the zone or below the low line if candle is getting closed. Rule number 6, avoid entries during extreme candle series. Sometimes the market creates a series of extreme candle. For example, multiple blue candles and multiple green candles, like over here. See, 1, 2, 3, 4, 5, 6, 7. Near about 7 candles. It was lime green candle, means extreme bullish. It created. During this moment, the market is moving very fast. Entering trades too quickly in this situation can trap traders. It is better to wait for price to approach a zone and then wait for the confirmation. Like over here. So as you can see, the candle got close below this line. So at such time, this zone was get marked by very strong supply zone. But at such time, you have to avoid selling because this was a series of candle, not a single or two candles. It was created by series of candles. So this first, when the price was above this zone was get marked with support zone. So of course, this is going to act as a support and very strong support. So market can react very fast and quickly at such kind of zones. So you have to avoid selling at such scenario, or at least for first reversal for selling. And as you can see here, the market gave close below the low line and the trade confirmation was confirmed by red candle. And after this was marked as a very strong supply zone. So at this time, it is going to act as strong supply zone because it was get created by red candle and close below the low line also. And support zone also was got broken by red candle. And after that, market took reversal again, created a small demand zone and took again reversal, and it got failed to again break the strong supply zone, as you can see over here. And market started to fall from here, and it created very strong selling opportunity and selling time, as you can see over here, because it was a very strong supply zone. After that, when market, rule number 7, when market move is all above all four zones, means sometimes the market become extreme bullish. So price can move above very strong demand zone, support zone, and support zone. For example, I will show you Nifty options because there is no such chart right now. I'm remembering like this. So see over here, both zones are there, demand zone and very strong demand zone at 47, and it went up to like so high, and it is now above support zone, and here is also price is still above support zone. So at such scenario, when price is trading above all four zones, buyers are very strong, but this is also place where reversal can happen anytime. If you are trading on a 3-minute chart, you should also watch 1 minute and 30 second time frame table. If you see the first strong first strong red signal, it can be a powerful reversal. At that time, it is very important to keep tight trailing stop loss. Rule number 8, similar for seller. When market is below all four zones. For this, we can see here market created very strong supply zone, again supply zone. After that, here was two resistance zone and market was below all four zones. So at such time also, you have to be very careful. But sometimes the market can reverse without creating a new zone. If you see the first strong green candle after heavy selling, it may signal that buyers are trying to push the market upward. Never ignore this candle. Never. If you are if you have short or if you have took an entry for selling over here and your stop loss is over here. Now you are watching the market and suddenly this candle appear. You have to surely exit from this trade for first at least, or you have to book profit 70 to 80%. So never ignore this candle. Rule number 9, avoid trading when the trend table is neutral. On Bitcoin we will see there is a market in sideways or not. It will be easy to show you. So like this, at least it is a 1 hour. In 1 hour it is a bearish, so we have to just find like 1 minute. See, 1 minute it is a bullish, but 1 hour it is a bearish. So at 1 minute you have to search for selling entry, not buying entry. But like this, if 1 minute give close below this line, you can enter for selling trade because bigger time frame is on your side. To avoid such entries when all the trend table is in neutral form, then it is often better to avoid trading for that day because such day are usually highly volatile or completely sideways. And these days often favor option sellers, not buyers if you are trading in Nifty. And if you are an option buyer, it may be really better to avoid trading and look for another script or stock. Rule number 10, always check higher time frame direction, as I said, in 1 hour. If 1 hour or 2 hour is bullish, then on smaller time frame like 1 minute, 3 minute, 5 minute, 15 minute, you should look for buying opportunities. If 1 hour or 2 hour is bearish, then you should focus on selling opportunities. This keeps your trade aligned with overall market direction. Now, if you want free access to the Emperor Candle Indicator, follow these steps. Subscribe to this YouTube channel. 1 minute. Subscribe to this YouTube channel, Live Trading Emperor Global. And if you are trading in Indian market, like in Nifty, Sensex for options and for options, then subscribe to this channel also. After that, you have to follow me on TradingView. Like over here, you have to click the follow button. After that, boost both indicators on TradingView, which are Emperor Candle and Emperor Pivot. Boost means you have to press the rocket button of on both indicator. Once you boost them, I receive a notification on TradingView, like over here. I get notification of boost and follow. Then send me a DM on Telegram or Instagram with the same TradingView ID you use to boost the indicator. If the boost ID and the DM ID get matched, you will receive free access to the indicator. So in today's video, we learned when to avoid trading, why trading between zones is risky, the effect of large time frame zones, extreme market condition, trend table neutral situation, and how to stay aligned with higher time frame direction. Remember, good traders are not the ones who trade more. They are the ones who avoid bad trades. So until the next video, bye bye, take care and happy trading.